Hello, 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 beautiful people. Welcome back to another exciting week with so much amazing good news I'm going to share with you. Here's the most breaking, exciting news to share with you this week. We have two arms and we have two legs and they work. The heart, it beats, and there is hopefully nothing physically wrong with your body and you are alive. I mean, that is success of the highest order. It's fantastic. I just read this on Google and I was like, that's amazing. It's nice to know that there is good things happening in the world. The sun came up today, like every other day, and it will go down when it goes down, and it will create a beautiful painting in the sky. And please go out and take a look. It's a very rare opportunity that happens every single day, twice a day. All right, so you want some like market stuff, I guess, market analysis. Okay. The world is completely kooky, but here's a bunch of poignant facts about the kookiness. The crypto markets apparently are, they're down and everything is crashed and everybody's crying tears. Yet, BlackRock, the owners of the entire world, have added Bitcoin to Aladdin. And I know that sounds like I'm like talking about some Disney stuff at this point. We're not talking about the Aladdin that's like my cousin that flies around on a carpet. That's a different Aladdin. He's a cool guy too. He buys Bitcoin too, by the way. Him and Jasmine made a killing in the last bull run. They really crushed it. But Aladdin is actually the trading software that BlackRock created that most of the world uses now. So 21 trillion US dollars of assets are controlled by this program called Aladdin that nobody even knows about. BlackRock has put the ability to buy Bitcoin into Aladdin, which is like the world's biggest asset managers can now buy crypto. Okay? In a time where everybody thinks we're going to zero and everything's going to die and stuff. At the same time, BlackRock added Bitcoin to its own fund. So now they actually have bought Bitcoin and they have exposure to Bitcoin. At the same time, the European Union is allowing banks to buy Bitcoin. They're allowing banks to use 2% of their capital to buy Bitcoin. So now when you really think about this, right? Apparently everything's shit. Apparently Bitcoin's going to zero as far as the average person thinks. Yet the biggest players in the game are making it part of the framework of the financial world, of financial systems of society. Okay, so long term, we were always playing the very long term game, and Bitcoin is on Aladdin's carpet, and that's how you get to the moon, right? So when you think about it, like we can't get to the moon on a plane. You have to have something like Aladdin's carpet, because Aladdin's carpet is, carbon neutral. What the fuck am I even talking about? Okay, but my point is, it's part of a software that the financial system will connect, and if you see Aladdin going by, just say hi. He's in town. He swung by Bali recently. Now another thing that's really poignant is BlackRock has confirmed that tokenization is the new way. So actually, I'm going to pull up our YouTube channel, and I want you to hear this from the horse's mouth. So our YouTube channel is called Life is More Than Crypto. You should definitely follow it. If you're watching this somewhere where you're not following it, give it a follow, because we post very poignant things like this, okay?
BlackRock and Larry Fink. Does this change your view of crypto at all? Oh, I actually believe most of the companies are not going to be around. This technology could be very important. I believe the next generation for markets, the next generation for security will be tokenization of securities. We will, and if we can have a distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code.
So did you hear what he just said? He said, most of these companies are going to die, which is, classic, what we've been saying. Most of this market is crap, shit coins, garbage, bullshit coins that are tricking people. But the CEO of the biggest asset manager in the world, BlackRock, said we know that tokenization of securities is the future. And this technology is built to tokenize securities, right? And we know tokenized securities, the way we do it is you take stuff that's real. You take real estate, it turns into a security, and you create a token and people can buy it. We're taking mines and turning it into a security and people can buy it. Farms into securities and people can buy it. Commodity supply chains into securities and people can buy it. That is the future. So always be looking on the horizon. And this is from the horse's mouth himself. That's the process that they're going to go through. Okay. Now, here's a real little fact, right? In 1970, houses were like $25,000. Cars were like $3,000, brand new. Okay. And remember, 1970 is when the dollar was tied to gold. 1971, the tie from the dollar to gold breaks, and from there now houses are worth $2.5 million. The same house. Cars are worth $60,000 instead of $3,000. Okay, we had this insane inflation in prices, and people thought they were getting rich, but actually, most people were getting poor because they were printing a shit ton of money and dumping it into the space. So, right now, what we're seeing is the money supply is actually shrinking. So remember, more money, more liquidity, higher the ocean, which is, the financial markets, the debt markets, the higher our little puddle on the beach called crypto goes, right? Right now, the ocean is shrinking. The water in the ocean is going down. The liquidity is going down, okay? So which way do you think the puddle is supposed to go while the liquidity in the ocean is going down? The puddle should dry up, logically speaking, right? Reverse repo has $2 trillion in it. And reverse repo is just a place that banks keep money because they have too much cash on hand so that they can earn an interest on it. It has $2 trillion on it, and now the banksters are coming up with new ways to use that as proof that banks have money, so banks can keep even less money on hand, less dollars on hand, which means when they have to pay us our money back, they'll have even less money on hand to be able to pay us back. Concerning, a little alarming, quite concerning, stomach churning, heart burning. Okay. Now, so this is something really important to understand about the markets at the moment, right? It's been interesting because in recent times we've had voice control come out into the world. You got an Alexa, you go, hey Alexa, can you turn on the lights? The lights go on, boom, magic. Okay. What nobody talks about is the voice control of the financial markets. The Federal Reserve at this point has direct voice control of the financial markets, and here's how. Right now, everybody's waiting for the FOMC meeting, which is coming up, and that's the Federal Open Market Committee meeting. Basically, it's just a bunch of, financial bankers and experts and government people get together and they have a discussion about which way they're going to lead the economy, because they get to do that. If they say we're going to take it one way, the markets pump. If they say we're going to take it another way, the markets dump. It's literally what the words that get uttered in that meeting are the words that trigger the market to go one way or another. So it's like voice control. They've literally Alexa'd the market through Aladdin. It's just like, it's all these names that are running the markets, okay? But there's a meeting coming up. The FOMC meeting happens like every month or 2 months. When it comes up, the Fed will say something. The Federal Reserve, which is the central bank of the U.S., which is the central bank of the world at this point. When they say something, markets are going to move one way or move another way. In reality, in the background, central banks are just issuing debt like it's going out of style. And they're just buying back bonds, right? They're just dumping money into the markets and they're buying back these fake made up promises to pay money back called bonds. And that's actually one of the reasons why the markets have been pumping recently. And that kind of flooding of money into the system is also causing dumb money to run into the markets. And, if you get offended from the concept of dumb money, really think why it offends you. I'm not calling you dumb, unless you're one of the dumb money people who run in when this kind of stuff's happening. In which case, stop being dumb money, be smart money. Smart money doesn't run in. Smart money walks like casually, kind of slowly, like with like style and stuff. They're like really chill, really relax, Smart money has like deep conversation about the universe and the conceptualizations of the existential angst of existence. That's smart money. Um, People are running into the markets while the economy is in frickin' free fall. Sorry, the economy is in fucking free fall. Okay? People are getting laid off left and right. Businesses are shutting down. Countries are ready to collapse. 69 countries are on the docket for this year. Supply chains are breaking down. Everything that we would normally talk about is going badly. Yet people think the markets are going to pump magically all of a sudden. It just doesn't even make sense. Okay? I mean, literally, the World Health Organization, yeah, those bastards, just told governments to stockpile medicines for nuclear radiation. Because, we don't have enough shitty news already. Why not just tell people to stockpile medicines for nuclear radiation? It's almost like they know something, you know? It's clear that we are headed towards that cliff at some point, either this year or next year. We're headed towards an absolutely biblical recession that will last years and years and years, right? And I mean biblical as in like 1930 style recession, not these like baby recessions like 2008 and 2001 and all that stuff. Those were just little bumps in the road. We're headed for like a cliff. And we've been talking about all that stuff, but now all the things are lining up to get us to that point. Now, that brings me to the point around crypto, right? What a lot of people are misunderstanding is Bitcoin was created in 2009, at the very tail end of 2008, right? That was the last time we had a recession in the markets. From then until now, it's just been good old times, up and to the right, everything's inflating, going to the moon. It's been moon times. And what we have right now is a whole generation, my generation and generations after, of people who have not experienced what a real recession looks like. And then we have, 4 or 5 generations, which is everybody that's alive today, mostly alive today, that have never experienced something like the Great Depression. All the people who experienced the Great Depression got very depressed and they died, right? So what we're going to go through within the next 8 years is going to be unprecedented in history, because now things have blown up to a point where 1930 will look like a blip on the radar. But secondly, in crypto specifically, the environment that is now around crypto, which is the world melting down situation, it's never existed during that. So we don't know what it's going to do. I don't know what it's going to do. None of these analysts know what it's going to do. We can have a very broad understanding of which way the world is going to transition and that the wealth is transitioning to digital assets, like our good friend Larry Fink at BlackRock is telling us. But trying to use the last, few cycles of Bitcoin to try to project and draw lines on it, and you go like, well, every time this happens, therefore this is going to happen in the future. I think that is done. I think it's going to do things that are going to blow everybody's mind, because now we're so conditioned to follow what's been going on there. Now, when you're looking at the markets right now, of course, everybody has gone to greed. All of a sudden, like that, we went from, oh my God, FTX has collapsed. Holy shit, this whole market's going to zero. I'm scared of buying it. I do not want to touch this asset. To, oh my God, did you see the price? It kind of went from 16 to like 23 or something. It's looking really good. I think I'm going to completely forget about the fact that the entire market collapsed and that there's a bunch of companies ready to go bankrupt, and that Binance is no longer allowed to use Swift, and they're 70% of the entire market, and the entire market is run on a fake version of the dollar called Tether. Let's forget about all that. Did you see the price though? The price would go from 16 to 23. So let's get greedy. Let's start running into the market and buying more and buying more and buying more. This is just, it's always funny to me, but these are lessons that people often learn the hard way. It's likely not the time that we go into the market, because the ocean is going down, the world is melting around it, economies are collapsing. It's unlikely that assets all of a sudden go on the run, simply because there isn't money being pumped into the market. The amount of money is shrinking, right? Now, let's look at our experts, because one good way that we're looking at it, and we polish this up, thank you, Cyril and Connor, this is just a look at what are our different analysts saying. So when we look at the kind of macro analysts, Both of them are like, look, this is all just an illusion. At some point, the market is going to go much higher when they start printing money. But for now, it's, nobody knows which way it's going to go. It's unlikely that it goes up. Our chart analysts on the stocks are both saying that it's probably peaked, which means down mode. Our crypto-specific analysts, crypto-specific chartists, are either saying we're going to go down, or they're saying, look, it's probably going to go nowhere. So not the time to, it's not going to go up from here, or might go up a little bit, but the point is the bull run is not back, okay? Gareth Soloway, one of the best kind of cross analysts, he's like, start betting against the market. And we have one guy, Hustlepedia, he's like, it might pump a little bit over the next little bit, Web3 and gaming, but that is his jam, so, But basically, everybody's like, no bueno, not looking good, okay? Now, looking at how the world is reacting to crypto, we're seeing a few things, right? Regulators and exchanges, they are tightening the noose. They are starting to create regulations to try to block people from doing this and that. Financial regulators are going to use FTX as an excuse to block people. Binance has been kicked off of Swift. So unless you're rich enough to have $100,000 that you transfer, you can't transfer money to Binance. Surprise, surprise. We knew that was coming. And you can't take that money out of Binance through Swift either. That's another key point. Unless you're wealthy enough to have $100,000, in which case, of course, we have white glove service for you to be able to move your millions and millions of dollars wherever you like, okay? Now, while all this bad news is happening, Amazon is getting into crypto. Okay, wait a minute. BlackRock is getting into crypto. All the biggest financial managers in the world are getting access to crypto. European banks are getting into crypto. And Amazon is now getting into crypto, okay? Google and them were already there in crypto. You see a pattern there? Short term, bad, holy shit, everything's gonna collapse and go to zero. Very long term, the biggest titans are walking into crypto and taking control of it. Right? So that's why when you play the long game, we know which way it's going. When you play the very short, get rich quick game, we know which way your entire bank account is going, like that. Down like that. So that's basically the news for the week. Okay, it's really interesting to think about it like this. Like, what you want to do in these times. A friend of ours says this, and I think he got it from somewhere. This is not a bear market; it's a build market. Okay, when nobody's looking and prices are cheap and all this stuff, what you should be doing is building your positions in your portfolio, building projects, building things that are ready for the next wave. And when the good times come back and all of these activities that are happening in the background that nobody's watching because everybody's pissed off and not looking at crypto anymore, when they manifest, by the time they manifest, you get out, because that's the point everybody else is going to run in. At that point, we exit, sit on the sidelines, let somebody else play the game, and then when the collapse happens, we come back again. Okay, so this is the contrarian kind of viewpoint on that whole thing. So we're also going to now go through the analysis, the on-chain analysis, because they made some really good points on this. So this is, we talked about long liquidations and short liquidations. In reality, the most amount of money that is made or lost within crypto is not made or lost within the spot market, which is buying something and holding it and riding it up and selling it, or buying something and going down and losing a bunch of money. There's a lot of money lost that way, but that's not the vast majority of money that's lost. Vast majority of money is lost in the bets on the price going up and down, which is called futures. So let's hear some details around that.
Derivative action. So this particular model is available in our
preset. So inside the Workbench tool, we also have charts, which is our base level metrics, but Workbench, me and my team have been rolling out all sorts of different metrics within the dashboard itself. So you'll find all sorts of different charts in here. We're looking at our total futures liquidations, and I'm going to zoom in on a 3-month basis here. This one, we're looking at hourly data. And what I've done, you'll see here on our futures short liquidation, I've actually done 1 minus, and I'm taking a 24-hour sum here. So sum of M3, which is our short liquidations, times it by -1, and that shows it on the negative axis. So we can now see when we've got long liquidations in green, short liquidations going on in red, and then the orange gives us the total USD value of both of those combined. Now, if you can believe it, this green here is showing you that some folks during this most extraordinary price action we've seen since October 2021, people still got liquidated on the short side. It's quite remarkable how people manage to do this, but there's always people betting on both sides. But as you can see, we had 3 very, very clear short squeezes. This was $165 million in a day. This was $100 million in a day, and this was $65 million. So you can see a fairly substantial amount.
Hundreds of millions of dollars of bets that were made on the price going down that the house won, basically, right? So the price was stable. Everybody starts betting. I bet it goes down lower. And then they pump the price. Thank you so much. We win the bets. Pump it again. Thank you so much. We win the bets. Pump it again. Thank you so much. We win the bets. Okay. So this is how the game is actually being played. It's just a casino in the background. And the average person who is trying to call these small peaks and troughs and stuff gets hurt in that process. That's a really important point to understand. That's what's going on right now. It's not some fundamental market thing. The bull run isn't back. All of a sudden, people aren't rushing to buy Bitcoin. It's just the people who control the market moving it so they can make a bunch of money on the bets of it going up and down.
Now, the other thing with
Now, this is an important one. Leverage is the problem in this world. And leverage is just the idea that people take money and then they borrow a bunch of money from the people with money and they make bets, right? So I can make, in the futures markets, I can make a bet with $1 and borrow $124 from somebody else, and I bet with my $1. So if I lose $1. If I win as if I bet $125. Now, can you imagine how many people rush into that and think they're being geniuses doing it? This ratio is a representation of how much leverage there is in the system, right? So that what you see is like, this is the highest amount of leverage we've had in the system ever. So basically, people just came in, borrowed a shit ton of money, made bets on the price going up or down. This doesn't define which way it's going. And then guess what happens? The people whose money you borrowed moved the market and dumped it, and dumped FTX, and then they made a bunch of money. But then there was still a ton of leverage in the system, which means still a bunch of loans that were outstanding where people had borrowed money to make bets. And guess what they did next? Everybody was betting on the price going down. So then they pushed the price up. Thank you so much. You thought you could borrow money from us and take our money. No, we're going to take that dollar that you bet, or usually it's like, whatever. So here's a description of that.
This is the futures estimated leverage ratio. So what we're looking at is, of all of the futures open interest, let's just take one exchange, for example, Binance. And if we did want to look at only Binance, you can change the exchange up here. So we're going to select Binance here. All of the patterns are fairly similar, but you can inspect it across multiple exchanges. Exchange. So you can, I'm an engineer by background, and what I like to look at this as your futures open interest, or the leverage. That's the force trying to move the market. You've got people who are betting with margin, adding more and more leverage to the system. That's the disturbing force. And the resisting force is the spot balance, or the trading activity, the actual spot markets, because generally speaking, futures markets are trying to target the index price, which is based on spot. So if the spot market starts to move, generally the futures will follow. Sometimes they front run, but this is how these dynamics tend to work.
So if that didn't sound like English, it's not. The futures estimated leverage ratio is the futures markets chasing the resistive force, which is the spot markets, and it's like, what? Can you just say that in English? Right? No. Then you would understand it. Then you would understand finances. Duh. The point is to keep you confused, right? Like we just said, higher this goes, more money people borrow and make bets. Then you move the price of Bitcoin and move the actual price of the asset by just buying and selling a bunch of it too quickly. And then the bets get won or lost, and the house always wins, okay? People borrowed too much money. Now people just lost a bunch of money. Okay. So this is here. Oh, this is a really good one. So this is a representation of exchange inflows and outflows.
So to put that into scale, here we're looking at our exchange, deposit, and withdrawal volume. Now, this one here is a workbench preset, and you can see we've got one here set up for the BTC. What's going on? So what you can see is that during the process of the market rallying, we've seen both an increase in inflows and an increase in outflows, right, relative to just before. So it's showing that exchange activity has picked up somewhat. There's been a bit more liveliness come back into the system. However, let's also put this into scale. What we're looking at here are inflows and outflows that are really the same as they were back through 2018, 19, and 20.
The more activity there is, more money going in, more money coming out, which means more activity, which means more usage, which means prices go up in a significant way. Right now, where we are is about the same as 2018 and 2019, the bear market times. So again, another indicator that's showing you, yeah, it's really unlikely that all of a sudden we're just going to go run off to the moon and everything's, you know, great, and we're apparently a lot of people are going to get rich. And then the final one I want to look at is this one. This is a really good metric. Like, you know, there's models that we can look at, and you can see, hey, where did the price go down to previously, and what can we project forward going through that. So watch this, and then we'll talk about it.
A good thing to see. Okay, so the last thing that we're going to look at is some really, really interesting pricing models. So one of the beauties of on-chain analysis is we can look at when coins are flowing in and out of exchanges, and we can thus calculate what is the average acquisition and disposal cost of those coins. So you'll find this one here that we're actually going to look at three different models. The first one is exchange average price by year. We're going to look at it by exchange, and then we're going to look at whales and exchanges. And all three of these you will find on the Bitcoin exchanges dashboard that we talked about at the beginning. So what we're calculating here in the purple, across all time, let's look at every single coin that's ever flowed out of an exchange and calculate the average acquisition price. Let's assume that every withdrawal is a buy, and let's calculate the acquisition price. You can also do this for deposits. Funnily enough, they actually tend to be very, very similar because, as you might have seen in our inflow-outflow diagram, it typically is fairly evenly matched in inflows and outflows. So what you can see is that this is the all exchange acquisition price, and it was down near the bottom of our 2018 market. That will become important in the next chart, so just keep that in mind. What I've then done is calculated a withdrawal price starting on the 1st of January 2017 in blue, the 1st of January 2018 up here in green, the 1st of 2019 in light green, 1st of 2020 in yellow, and then 2021 and 2022 in red. So what you can actually do, it depends. I mean, for me personally, this was actually me up here at the light green. I bought the absolute tippity top of this market, and I rode the whole thing all the way down. So
teaching you how to read this. He himself bought the top and rode it all the way down. Okay, so there's like nobody who's a hyper genius who just always knows how to do it. Oftentimes you have to play the game and actually write it from the top to the bottom to realize it. So my point with this is this line at the bottom, this purple line, is the average realized price of all of the coins ever. Okay, don't worry about what that means. It's just a calculation of, he just described how to calculate the actual value. But basically, when the market comes down and touches that price, that means that is the actual real value of all the coins combined together. So let's look at what this model says is the actual real value. It says it's about 11K, $10,000 to $11,000 is the real actual value of Bitcoin. Okay, and it went up to 70 and everybody was like, we're going to 100. No, it's coming back. It's probably going to come back to that 10, 11K mark like it did this time. If it breaks below that, then we have unprecedented times ahead. But still, it going from this 23 or whatever down to that, 10, 11 mark, I would not be very surprised. So my point with all this stuff is now that we're all of a sudden back to good old greed times, which we haven't been in for a very long period of time, right? We're back up here for greed. And all this time back here when there was fear, nobody wanted to buy it. And now all of a sudden people want to buy it. Don't be one of those people. Okay, there's more fear coming. There's more panic coming. I wouldn't be surprised if we go back down to these 10 levels, which we had back in May of 2022. That's probably what's going to happen ahead, because there is some shit coming as far as what they're going to do with the traditional markets. So that's it. The biggest players in the game are all entering this market. You got your Amazons, your BlackRocks, Aladdin hooks up to everybody, State Street, Blackstone, all the names of the people who run the world, they're all entering the markets. Banks are entering the markets. Everybody's starting to hook up to these systems. All of the wealth that is tokenized securities in the world are now going to be on there. It's explained to you by the CEO of BlackRock. While there's all this volatility in the markets, and they're trying to convince you that we're going to go on and run from here. So no, patience, relax, chill out, enjoy your 2 hands and 2 feet. Remember, that was the breaking news. We got 2 hands, 2 feet. We got 1 head. It's really nice. Look, does this, and the neck doesn't hurt. Enjoy that process. Enjoy real life. Enjoy what's going on. Focus on your businesses. Figure out ways to add value to people's lives, and let this process play out. 2023 is going to be a very interesting year. There's probably something major coming. Some kind of a banking freeze or collapse or something is on the table. Who knows? Black swan events are like that, where nobody knows what it's going to be. When that thing happens, that'll be the excuse to go to war or print a bunch of money. When that happens, when they start flooding all this money into the ocean, that's when we come in and start swimming in our little puddle, because that's when the puddle go up. Okay? So thank you. If you listened this far and you're not subscribed, click that subscribe button. If you like this, like it. If you don't like it, dislike it, and then tell me why you dislike it, and I will answer back with a very respectful answer, and I will listen to every single thing that you say, and we will see you next week for another update. Love, love.